Welcome back to another episode of With Sonar. I'm Luke Falaska. Again, it is Wednesday. We are live, and of course, joined by Kyle Taylor. Kyle, it is fantastic to be back here in the studio and not filming from home.
Unfortunately, if you guys are tuning in this week, it is not going to be the Kyle show. So if you're watching now, you should probably turn away. But no, it's great to be back. And we're in the studio. You can actually see us. You don't have clothes behind Luke.
That was for like 5 minutes.
You're not in Luke's closet, so
goodness.
it's a great time to be back. Our videographers are loving us right now because they absolutely hate Luke's Wi-Fi connection. But we're here. Welcome back.
You left so much out there. Like you pitted all the fault on me, and while I understand a little bit belongs to myself, like there's just so much more to that story than what we're letting on. But anyways, neither here nor there. We're back in the studio. We got the professional grade equipment again, okay? We're up there. We're the best of the best with them. We got the best crew in the world, okay? But more importantly, we're here to talk about sonar, all right? Talk about why we have the best, fastest data. Whoa, segue maybe?
Segue? Well, listen, you're really pushing the envelope there. That was probably a scale of 1 to 10, a 2 on the segue capability.
But it's not a 1.
Let's give Luke a little time to just get back into the swing of things. We're back here, but no, he's 100% right. So we're talking about fast data. Now what's fast? I mean, I'm fast. Luke's slow. I mean, that's a good representation, but
have you seen me eat a cheeseburger?
Am I Usain Bolt fast? Like, talk about uncontested shots.
Call me slow again once you see me eat a cheeseburger.
Yeah,
You don't ever use the word slow again around me.
Oh, geez, you could just see it.
You can't see it because it's gone that quickly. And I'm not talking like the dollar menu, Wendy's, McDouble or something. I'm talking, give me like, the 2-pound burger. That sucker will be gone in no time at all.
No, exactly.
Anyways, we're getting distracted here. Fast data.
Fast data.
Right.
And so there's been a lot of comments on our videos lately, and we're just really starting to get behind some of the data that we have, and it's great because there's been more viewers than ever that have been tuning into some of our streams, and that's really helped us obviously push the brand of Sonar, but talk about what's the opportunity out there. If you followed me or Luke, you know that we're pretty big on LinkedIn, and we put a ton of content out there, and so we see a lot of things around fast. Now, what is fast? Because we see things, and we try to consider us the fastest of the fast. I mean, we're literally the pinnacle of how fast you can get information to your fingertips. But there still is some question of, well, are there other fast providers? And I think there are.
Yeah.
But how do we compare?
Well, so in the world of data. There's a massive, chasm in terms of like speed that data happens, right? If you think of, let's talk about the stock market for a minute, right? That's really hot right now, especially if you've been following what's going on with some of these short squeezes, but we're not here to talk about that. But if you think about the data that supplies like if you think of a Bloomberg terminal and some of the bonds that get traded, right, and some of the data that supports a lot of those trading floors, that data gets transacted at such a micro of a second level. Like it is such a tiny delay from when it comes in. Like first off, indistinguishable from the human eye,
right,
but it's so incredibly fast, all right? So like that's probably like some of the top tier in terms of fast data, right? And then you kind of go to the other end of the spectrum, right? And you think about a lot of government reports that come out, right? Very long-term trending. Some of them come out weekly, monthly. Some of them come out quarterly, annually, like you think of the census data, right?
Right.
Very powerful data, but very slow to accumulate that type of data. So if you think about that scale, right, if you think about some of the stock market data that powers some of the trading mechanisms on Wall Street, right, with like such a tiny delay, incapable of being measured unless you have supercomputers, all the way to the other end of the aisle, which is like say 10-year-long census data from the government, on that spectrum, where does freight sit? Like, where does our industry sit? Because I think different industries sit at different levels.
No, that's a great point. And to historically call out, I mean, it was maybe 15 years ago that people were sending tenders via fax.
Yeah.
Like transportation is probably one of the last areas or verticals or industries that really gave data a chance. And so what you have out there.
I have to interrupt for just a moment.
Yeah.
I'm probably going to show my age here. If you folks don't already know it, I've never sent a fax in my life.
Oh, neither have I. It's a thing of the past.
And I don't know if I would know how to.
I did work at a UPS store where I did get a fax.
Did you get a fax?
Never actually sent a fax.
I received a fax, but came to my email because I don't know, the company that I used to work for had that set up. I don't
No,
know.
but anyways, back to what we're here to talk about. So to simplify what he was talking about. So there's a lot of data out there. So you have really invoice data. You talked about some of your load boards that you receive information from. Those are voluntary data sets that are given by their customers. And naturally, by looking at invoice data, I mean, if that doesn't ring a bell, it's like looking at last month's energy bill on your house. It's just going to give you a good representation of what's happened last month. Naturally, on a lot of these data sets, you're going to see lagging indicators of what's happened in the past, which are great. They do a really good job of telling you exactly what's in the rearview mirror. But from a lot of our customer base and what a lot of people are starting to want and need in the industry, we just need something faster.
Right.
And
if you're making a decision today, and I think when we're constituting the word fast, it comes down to when do you need to make the decision and what are you basing it on? If I'm making a decision today, I need to have today's information. Right? Or certainly no later than yesterday, right? But if I'm making a decision today, I can't use data from last week. I can't use data from 3 days ago. That's too old. I need to at least have something that's within the 24-hour period that I'm looking at. Right? And I think, and that's typically feedback. Obviously, in an ideal world, you would have everything in real time, but we're not there yet, at least not our industry. But we'll probably get there. But at least for right now, I think what constitutes fast or really fast or something that we would say would be maybe not be industry standard would be how can I look at something, if I'm making a decision today, how do I look at data within that 24-hour period?
Right. And so really to just sum that up, for those of you that aren't sitting in a FreightWaves seat and you're calling your data fast, you're a liar. What we're going to show you today is a little bit on the front end of the transaction. So for all those people that are familiar with transportation information, you're probably really familiar to what we were just talking about is invoice data. So what we're looking at is the tender data, the communication, hey, Luke, I have some freight available that's going to pick up in 2 days. We're looking at it from that perspective. And so instead of looking at it was like, oh, well, a couple of weeks ago, we saw the freight was moving for $1.75 a mile. Okay, that's great. Well, things have changed. Dynamics have adjusted. There's different supply and demand metrics that affect that, and looking at the invoice just tells you what happened, doesn't tell you why. And so as we start rolling into this year, 2021, more and more customers being producers of freight, shippers, are wanting more information of what's happening. They don't only just want to know where your truck is, they want to know why you're pricing the way you're pricing. And so that's where this comes in. And so what we've seen and what we've kind of called on, if you've watched our show last week, we said, we told you so. We were the one telling you what was going on. And this was starting at the beginning of the month that, hey, rates were going down. We were calling it out. There's a softening occurring, and it happened. And it happened just the way we said it was happening. But now the dynamics are starting to change where certain lanes are moving and others are not. We're seeing some lanes actually increase and other lanes decrease. So if you take that mentality of, oh, everything's softening, but a specific lane is not.
Right.
Well,
it's that volatility of the market. Some markets are going down, some are going up, right? And I think it's real easy for folks to say, like, listen, we know traditionally or seasonally the market does tend to soften back, in January after the holidays. We know that. Everybody knows that. But what's key is understanding, and particularly on a lane-by-lane level or a market level, when does that happen? When does that flip happen, and what drives that flip? And that's something, and that's what we were telling people. That's what we were saying, we told you so. It was the exact moment when it happened that we were able to call that and see that before it actually showed up in rates. Like, we actually called the dip before it actually happened to rates. And we knew exactly when it was going to happen. So it's looking at that tender data. And for those that aren't aware, let's actually go ahead and throw this up on the screen to give a little visual to what we're talking about. The tender data here, for a moment, what I really want you to look at is just look at that blue line. And I'm actually going to zoom in here for you a little bit. All right. So this blue line here, okay, today is the 27th. So that blue line there, you see it all the way down at the bottom, it says 126. That's all the data that was tendered yesterday. Okay. Now, keep in mind, those are the loads that are tendered. So that blue line represents load requests or load tenders from shippers. Now, those are happening 2 to 3 days in advance from pickup, meaning the data that we looked at yesterday is really representative of what's going to happen tomorrow and the day after.
Right.
So when we see data, if you need to make a decision today, right? You're looking at all the information that was transacted yesterday. You can confidently go in knowing that that's what's going to happen over the next 1 to 2 days. And that's how we're able to see exactly when those flips are going to occur a little bit before they happen. And you can even think of that as a little bit more lead time, because if you know that's when the market flips, typically it takes another couple days for folks to catch on. So it gives you that much more of a notice. So really you could even think of it as a 4, 5, 6 day lead time from when everybody else catches on.
Yeah, I mean, even just looking at the data set, average tender lead time is
two and a half days.
2.5 days. And so because these are actually going out when these tenders are being sent out, and again, tenders being the messages being sent from shippers to carriers and brokers. Because we're getting it on the front end of the transaction, we are identifying these trends as signals. They are leading indicators. And that is, we're the only place that you can find these leading indicators, and it puts us in a really good position to one, obviously have a pretty badass product, but two, to just keep the community aware. A lot of people that are watching this maybe aren't Sonar subscribers, and nor do we, I mean, obviously we want everyone to be subscribers, but the fact that we just want you to make better decisions is all we want to do. We have no bias towards a specific market or specific customers that are coming our way. We just want to bring transparency and awareness. And so, but with that comes a lot of responsibility.
I have a bias to Chattanooga because that's where I live.
Yeah, but
actually, I don't know if I do. I don't know how I went to Chattanooga.
Football team. We do have a Lookouts team.
We do have a Lookouts team, a minor league baseball team. But we do have that.
My Bucks are. I'm really sad that I'm not going to be down in Tampa in 2 weeks. So
what's going on in Tampa?
A little Tampa Brady action, a little Super Bowl Sunday. A little.
Oh, they still do that?
Oh yeah,
it's still a thing. Huh.
Coronavirus doesn't exist in Florida, in case you didn't know. Don't look at any data sets because that would then void that topic, but it is true. No, but to talk a little bit further, there is another concept that we really want to kind of walk through.
Blue to blue.
It is called that blue to blue.
Is that representative of the FreightWaves color scheme? Because we have a lot of blue in the FreightWaves world.
It is this blue and that blue. And that's exactly, so no, it doesn't have to do with this color scheme, but it is something to do with a few data sets that we have within Sonar. And so the blue to blue concept is actually something specific for carriers that is
actually, hold on, I gotta take a moment here. So Kyle, I know you know blue to blue inside and out. But when I came to FreightWaves a little bit before you, and I actually heard the history of blue to blue. We didn't come up with blue to blue. One of our customers came up with blue to blue. It was actually a small carrier. I think they had maybe less than 10 trucks, so it was relatively small carrier. They bought Sonar back in the early days of Sonar. This is like when Sonar still, it was still in development. Well, it's always in development, right? You're always improving the product, but this was still in the really early days of Sonar. And this particular carrier was super smart, came up with this concept, told us the amount of benefit and profit that they were making from it, and we were just like, we were blown away. And that gave us the ability, I had to mess with my earpiece here, gave us the ability to really learn from that and really push blue to blue on a lot of prospects that come in.
Right.
So that being said, just to understand the history here, that's where this came from. That's where this concept came from.
Some of the best products come from our own customers.
Yeah.
And
really, we made the product. Our customers told us how to use it.
Exactly, exactly. And so what we found with this, and for those of you that have been following Sonar for some time, you know us for the charts, and so we got really good at navigating these charts before we had things like the lane signal and the lane scorecard application. What this does is it puts just real simple 2 maps side by side. What do I need to know? I want to know where the freight is that I have the most opportunity to capture. Where do I have that negotiating leverage? And then second, where do I have the highest potential for having the largest rate per mile? And so to start off with the first map, if we want to throw up the map here, this is going to be our head haul index. And zoom out a little bit on that, Luke, and so you can get kind of a grasp of everything. What this looks at is load balance. And so what goes into this is outbound volumes and inbound volumes.
You mean like a load to truck ratio?
Yep, except for we do not have that. We have something that's just a little bit better because, one, brokers aren't posting their loads and it's not accounted for in this. There's less duplications. I'm sure people who are watching this have come into those times where it's like, oh, well, the load to truck ratio is in my favor. But by the time I picked up the phone, the broker laughed me off the phone because I thought I had the negotiating leverage and I was wrong.
Yep.
And almost every single small carrier.
It's almost like they posted that same load 8 times.
It's almost like Kyle Taylor Brokerage and Luke at Luke Brokerage posted the same load because their customer said that they had it.
Yep.
It's not like that ever happens. It's not like I'm talking from experience or anything. And so from these like habits that I learned of using these load boards, I would post things Atlanta, Duluth, Chattanooga, all of these different areas just so I don't have to work as hard and get carriers to call me that see our loads posted. But what that does is puts invalid information at your fingertips if that is the only data set you use. Now what this looks at is actual transactions that are moving right now. And so these are on, again, as updated as of yesterday. And so what we're seeing is darker blues are going to be more outbound presence, more freight, more opportunity. If I'm a carrier, blue, that's the part one of the blue to blue.
It's not, and it's not solely just that there's more outbound volume, it's in relation to the inbound. So this is where it becomes super valuable. And this updates, just like Kyle said, every single day. So the darker the blue means there's more outbound loads than what's coming into the market inbound. So like, let's just say, for example, right, you're down here in Savannah, Georgia, and let's say there's 100 loads shipping out today and only 80 loads coming in. Right? Well, that means that the 80 trucks coming in delivering those loads are not going to be enough to resupply and take those 100 loads out the next day. Right? Therefore, you're going to have to deadhead trucks in, meaning the trucks coming in are at an advantage. They've got, basically their pick of freight. Right?
Correct.
Think of it like that. So the darker the blue means there's a lot more freight, much more outbound demand than what's coming in. The red would be the opposite. Those are your backhaul markets. A lot more freight going in than what's going out. Now, some of these might be obvious, right? Your SoCal, those are typically dark blue. Florida is generally red, but sometimes these markets flip, and the extremes that they're blue versus red also change, and that's very important, right? Understanding where you have the best potential for the most opportunities, right? It's all about probability. Where can I put my truck today? If I'm a carrier, where can I put my truck today?
Right.
Where it's going to have the most opportunities to choose from, where I'm going to have the least competition from other carriers. So.
Right, and for reference as well, start toggling back to last week.
Yeah.
Just to show how much this changes. That just goes, this is going to tell you that opportunity is starting to open up again because we're going to see some of these blues start to become lower shades of blues. And so having that ability to have it every day because it updates every day gives you the ability to come in and be able to make the best decision possible. Yes, getting on the phones is probably one of the best ways to understand what's going on tonight or around you right now, but is it the most efficient way to find your freight? What is the actual cost because of your own time and labor to put into this of servicing those loads?
Absolutely. So what I've just gone ahead and done with this map is I've changed things around a little bit. So now the blue represents where that head haul index is increasing, meaning the blue markets before are getting darker blue. The red here represent those markets are getting cooler, meaning they're becoming more red. Now, it doesn't mean like if you see here on this map, now Ontario, California is red, a little bit red. But before we saw it was blue. That doesn't mean that this is a backhaul market. It doesn't mean it's a soft market at all. What it means is over the last 7 days, that's the direction this market has moved in. So maybe versus Memphis, we saw Memphis was dark blue before and it's dark blue now. That means that not only is it a head haul market and it's in my favor, it's becoming more in my favor, right? So it's all about understanding, again, where can I send my truck for the best possible loads, right? For the most opportunities. This is your answer. Keep yourself in the blue to blue.
So we just talked about the first blue. So this is still on this is the haul map, so it's still talking about the first blue. And so the second blue that we're going to refer to comes into the carrier capacity side.
And we're looking at dry van here for folks that are curious. Right now we're looking at dry van. We could absolutely flip it around to reefer if that's what you do, but for right now we're keeping it on dry van for simplicity's sake.
Correct.
All right, so here's the other map for you.
What this jumps into is what are the other carriers saying? Not only do we monitor those messages that go from shippers to carriers and brokers, we monitor whether or not those carriers are accepting or rejecting that freight. And so what that gives us is the tender rejection index. It's a percent value. And so on this map, the darker blues are going to be higher percentages. In the center of the states, you're going to see that 1 in every 2 loads going out of these markets are being rejected. Now, talk about opportunity for really a higher rate per miles. That's where you're going to find it. Because naturally, we've all been in it. When do you reject freight? Hey, we want to haul this load. I got $1.75.
LOL, I'm getting $3 a mile over here.
Yeah, no thank you. majority of the time that people reject freight is because of money. They feel like they have better opportunities elsewhere. And so this is the only index that gives you that sentiment.
As well as capacity, right? As shippers start to request more and more volume, eventually there's only so much capacity. We were talking, we've said this before, earlier, or I guess now last year, at the very end of last year, Snyder was saying that even if their load tender request went down by 10%, they would still be rejecting freight because they don't have any more capacity. So sometimes it's also a matter of capacity, and obviously we all know as capacity tightens up, what goes up? Rates, up and to the right. So that's a perfect example here. And not only that, it also tells you the higher rejections are, the more volume shippers have to push over to the spot market.
Correct.
Which again, if you run on the spot market, blue to blue, that's only going to help you even more. So not only does it tell you where there's less capacity or where you're going to have less competition with other trucks, it also tells you where shippers are having to rely more heavily on the spot market.
Exactly.
Blue to blue.
Blue to blue. It's sometimes as simple as that. And that's why we work with a lot of dispatching services. A lot of owner-operators are using this platform, especially recently. I mean, I feel like there's been a wave of dispatching services and owner-operators in the past 3 months.
I signed up 2 owner-ops this month, and I signed up a dispatcher this month.
There we go. And so what this gives you, there's always gaps. There's gaps everywhere, and so this is the placement of like what's happened since that last net 30 that you just looked up for that rate per mile. Well, great. How do you feel negotiating on potentially rates from pre-New Year's Eve?
I mean,
does that sound like
false
something?
Expectations is what it is, right? Because we know how volatile the market is, right? Like we've been looking at rates, right? Rates came down obviously a ton. There were some lanes where rates were decreasing by 30% compared to where they were a month ago. Some rates are actually going back up and are forecasted to go up more over the next 30 days, right? So that's just happening. They're all over the place, and that's just the reality of it, right? So you need to, especially in this market, especially if you're a smaller carrier, right? You know, sub 20 trucks, right? You really need to just put yourself in a place where the odds are in your favor, right? Where the probability of getting more loads or higher paying loads is that much more in your favor, right? It leaves out some of the guessing game of I'm really going to have to go to bat or I'm really going to have to fight with these brokers, right? And there's always some negotiation, right? There's always a little bit of art to it all. We all understand that, but you know, it's putting yourself in a place where you have the leverage and knowing that you have the leverage when you go there, right? Because it's a big risk, especially if you're sending your truck to an area of the country you don't typically send it and you don't know how the market runs over there. That's a big risk. So you really need to have that level of data, that transparency to know what's going on. Hey, where am I going to be when I get here? What's happening over there?
Correct. And you know, as we start seeing rates fall, what happens? Especially with carriers. We were writing articles at the end of the year that was discussing that carriers were printing money finally. And so with rates going down, and fortunately we saw truck and trailer orders going up as well. So you carriers out there do what you do best. As soon as you get a little bit extra money, you buy more assets, which makes sense overall. But when it does swing to rates starting to lower, with softening, with less demand for trucks in specific markets, now you just had your fixed expense go up, and you now are pulling in less revenue.
And you just hit the nail on the head. It's in certain markets, right? Even if the overall market does go down, there will always be areas that are tight. There will always be areas of opportunity for you to profit. And it's all about knowing where those are.
El Paso, Texas is heating up right now. If you didn't know, now you do.
Well, that's been hot, but it seems like it went from hot to even hotter. It's like, goodness, can you just take a moment here for us to catch it? It's like GameStop, right?
Yeah.
GameStop, the stock just keeps going up. You're like, okay, surely this is the top. Nope, we're gonna go up some more. It's El Paso right now.
Literally, and same thing with Dallas. Because if you were looking at any articles that we posted lately, who just announced that they're going to put in a massive DC in Dallas? Walmart. So not only do we see a lot of Silicon Valley, these large financial institutions coming into the Texas market from California, but now we're seeing just a redistribution of how Walmart is going to be servicing their stores in that region. So that's going to be huge, which is going to cause what? More trucks to enter that market, which is going to completely change the dynamics of that market. It's exactly what happened in Denver, Colorado. Denver, Colorado, going through COVID. For those of you who don't know, we love drinking beer. You see, We're sitting on top of a bar right now. Not actually literally, but underneath our feet is an actual bar here.
Like the floor below us is a bar.
And so what happened in Denver is, and with a lot of people, it's not that we stopped drinking beer, it's that I stopped pouring it from the tap.
Yep.
And I started buying what? More cans. And so it changed that Denver market, which is what? Big for Coors. And so what happened there is that they started importing more raw goods, which caused more trucks to enter that market and had lower volumes on these big kegs. So now you're seeing lower packaging, which is causing what? More demand for trucks in that market.
Exactly, and you know what we have to do here, because I just pulled up the El Paso market, and it's just it's such a perfect example. It brings everything full circle here. Now we're going to look at this in chart view. You could absolutely look at it in the map view that we were just looking, but for sake of sharing it here on the screen, it does look nice in the chart. So let's go ahead and throw that up for the viewers. All right, so folks, here's what you're looking at. Notice that white line there. I want you to ignore the green line. Just look at that white line, nothing else. That is the El Paso dry van tender rejection rates on a daily basis as of this morning. We're at just under 34% there. If you can read that number on the right, it says 33.84. Let's just call it 34% of all loads are being rejected. Now go down here to this green line. That says 21.1. Let's just round it. We'll call it 21. That is the national average for dry van tender rejection rate. So the El Paso market, it's more than 50% above where the national average is right now.
Jesus.
But here's the crazy part. At the very end of December, it was at nearly 40%, and in a matter of just days, it dropped to 11%, and then jumped up, kind of hung out there for a little bit, and then now it's going back up some more. So that white line, it tells you, like, it went from super soft to super tight, 50% above the national average. It was literally 50% below the national average, and then now it's 50% above the national average.
Money. That's what we're talking about here.
Blue, people.
At the end of the day, if you want to make better decisions, great. Talk to us. You want to be forward thinking? Great. Talk to us. Follow what we're saying. But there are going to be times in the future that there's going to be these big swings, and having averages from 30 days ago, have at it. Good luck. But if you want to use something to really put you in a place to be, I know this is a big old infomercial, which it pretty much is, a little bit of banter, a little bit of info. And so that's what we have going on here. But
yeah. Now also too, something with a lot of this information, right? The market's volatile. We're not saying that you don't you're not going to be successful without this. You absolutely are. I know a ton of folks that are crazy successful without Sonar, right? Because they know their network really, really well. So knowing your network is very important. And this isn't here to really tell you how to run your network. It's really here to provide visibility of what's going on around your network. So, and that's where Sonar is powerful. It just gives you the ability to see what's happening outside of where you operate, to understand, okay, maybe there's decisions that we can make for the business that we don't see because it's outside of our network, and that allows us to be more profitable. It allows us to grow more. It allows us to provide more transparency to our customers, right? And this is true for all folks, whether you're on the shipper side, the broker side, or the carrier. I know we're talking a lot to the carriers right now and how they can use a lot of it and leverage a lot of this to keep their trucks rolling and put themselves in successful places. But it works the same way for brokers. It works the same way for shippers, right? It's all about just knowing, hey, what's going on outside of my network? How do I utilize that information to know when I need to make a decision that will potentially affect my network?
Right. No, that's exactly right. So. Well, cool. Well, what do we got tomorrow? Tomorrow we have the Sales and Marketing Summit.
That's right. Tomorrow is the Sales and Marketing Summit. I did an interview that'll record. I'm not in my closet. I just want to make that.
They kicked him out of his closet. I heard they made him go 4 other areas.
I tried to do it in my closet. And by the way, I have a very nice closet. It's got air vents. It's got a window. As far as closets go, it's very nice. I have 2 little kids. It's the quietest place in the house.
Yep.
That's why I'm in there. Okay. I'm not trying to make a statement or something of, hey, I need to be paid more so I can afford a bigger house or something. But
maybe.
But
no, tomorrow's gonna be great. We're gonna hear a lot of people from the marketing side of how that's being affected within COVID and in the transportation space. And we're also gonna see some sales things as well. So you're gonna see a whole banter of different things to learn tomorrow. And it's I think our first summit of 2021.
I believe it is, and it's gonna be a great one. So tune in. All right, folks, that's it for today. We had a fantastic show. Leave a comment below for any questions, and we will see you next Wednesday live at 3:30 p.m. Have a fantastic day.